Tesla is in serious trouble, and this time, it's not just the US economy causing it. The electric vehicle giant, once hailed as the future of transportation, is now facing a crisis that could shake its very foundation. Canada and the European Union have just fired back with massive retaliatory tariffs, escalating an already tense trade war. These tariffs are set to make Tesla vehicles significantly more expensive in key international markets, potentially driving away thousands of customers. The question now is, can Tesla survive this latest attack, or is the empire that Elon Musk built finally beginning to crumble? But here's the real kicker. What's happening behind the scenes is even more shocking than you might think. Stick around as we dive deep into the unfolding crisis, exposing the truth behind these retaliatory tariffs and what they mean for Tesla's future. What just happened? Let's rewind for a second. For years, Tesla has been riding the electric vehicle wave, positioning itself as the leader in the global transition to sustainable transportation. But 2024 has turned into a nightmare for the company. Once a dominant force in the EV market, Tesla is now facing a brutal combination of declining sales, increasing competition, and economic uncertainty. What seemed like an unstoppable rise has suddenly hit a wall, and the company is struggling to maintain its footing. The signs of trouble are everywhere. Sales are plummeting in key international markets, with fewer buyers willing to pay premium prices for Tesla's vehicles. The company's stock price has taken a steep nosedive, wiping out billions in investor wealth. And now, Tesla is facing its biggest challenge yet, one that could redefine its future. In response to recent US trade policies, both Canada and the European Union have fired back with massive retaliatory tariffs, putting Tesla in the crosshairs of a growing economic battle. Here's what went down. Last month, President Trump announced sweeping tariffs on European and Canadian auto imports. His administration framed the decision as a necessary move to protect American automakers, claiming that foreign companies were engaging in unfair trade practices that hurt US industry. The idea was to strengthen domestic production and give American car manufacturers a competitive edge. But the strategy backfired. Instead of shielding US companies, these tariffs sparked retaliation from Canada and the EU, and Tesla is now one of the biggest casualties. In retaliation, Canada slapped Tesla with a 35% import tax, and the EU is imposing up to 50% in additional tariffs on US-made EVs. Tesla's cars are about to get way more expensive in some of its most important international markets. For potential buyers in Canada and Europe, Tesla vehicles could suddenly become unaffordable compared to local competitors like Volkswagen, BMW, and Mercedes. And for Elon Musk, this is nothing short of a disaster. Tesla's perfect storm of disaster. Now, you might be thinking, okay, but Tesla is huge. It can survive a few tariffs, right? Not so fast. Tesla isn't just dealing with one setback, it's facing a perfect storm of disasters that could threaten its future. The company is being hit from all sides, and if things don't turn around quickly, this could mark the beginning of its decline. One of the biggest problems is plunging sales in Europe and Canada, two of Tesla's most critical international markets. In 2023, Europe alone accounted for 30% of Tesla's total global sales, while Canada made up another 7%. Now, with these new tariffs in place, Tesla is suddenly at risk of losing nearly 40% of its market share overnight. The worst part, Tesla was already struggling before this crisis. In the first quarter of 2024, sales in Europe had already dropped 18%, and in Canada they had fallen 22%. Now, with the massive price hikes caused by these tariffs, analysts predict Tesla's sales in these regions could decline by as much as 40% to 50% by the end of the year. For consumers, the decision is simple. Why buy a Tesla when Volkswagen, BMW, and Toyota offer high-quality EVs at a lower price? The impact of these falling sales is already being felt in the stock market, where Tesla's value is taking a major hit. Markets thrive on stability, and Tesla right now is anything but stable. Tesla's stock has plummeted by over 45% this year, wiping out billions of dollars in investor wealth. Even Elon Musk, once the world's richest man, has seen his personal net worth shrink by nearly $50 billion since the start of the year. Tesla's total market value has now dropped below $500 billion for the first time since 2020. Some investors are even calling this the start of a Tesla winter, a period of sustained decline that could force the company into mass layoffs and factory closures within months if nothing changes. But perhaps the biggest nightmare for Tesla is the direct fallout from the Canada and EU retaliatory tariffs. Canada has long been Tesla's strongest North American market after the US, but with the new 35% 25% import tax, Tesla vehicles will now cost significantly more than before. The same problem is happening in Europe, where Tesla had been dominating the EV market. With a 50% price increase due to tariffs, European customers are now looking elsewhere for their electric vehicles. This situation is a huge win for Tesla's competitors, particularly European and Chinese automakers that are already aggressively expanding their EV production. Companies like Volkswagen, BMW, and Mercedes now have a major price advantage, making their vehicles the more affordable and attractive choice for European consumers. Meanwhile, China's rising EV giant BYD is rapidly gaining ground, offering high-quality electric vehicles at lower prices. Tesla, once the king of the EV industry, is now at serious risk of losing its competitive edge to these growing rivals. As Tesla battles these challenges, the big question remains: can it recover, or is this just the beginning of its downfall? Elon Musk's political gamble backfires. Now, let's talk about the real reason Tesla is at risk of collapsing: Elon Musk's political miscalculation. While Tesla has faced its share of market challenges before, this time, it's not just about competition or pricing, it's about how Musk's political alliances are damaging Tesla's reputation on a global scale. His close association with former President Trump is proving to be a massive liability, especially in markets that once embraced Tesla with open arms. For years, Musk has been one of Trump's biggest business allies, publicly supporting his economic policies and even attending White House meetings on US manufacturing. He positioned himself as a key player in Trump's vision for American industry, advocating for deregulation and economic nationalism. But that alignment is not playing well outside the United States. Canada and the European Union, two of Tesla's biggest international markets, are now turning against him. In Europe, Musk's ties to Trump have become outright toxic. European consumers, who have long supported progressive policies and environmental initiatives, now see Tesla as a brand that is politically compromised. With Musk frequently engaging in political discourse that clashes with European values, Tesla's standing in the region has suffered a massive blow. Brand favorability in Europe has dropped below 40%, a stunning decline for a company that was once at the forefront of the EV revolution. In Canada, the backlash is just as severe. Canadians, who have largely opposed Trump's trade policies, are now associating Tesla with the very administration that imposed tariffs on their industries. This has caused a dramatic shift in public perception. Tesla's brand favorability in Canada has plummeted from 82% to just 49% in a single year. What was once seen as an innovative, forward-thinking company is now viewed as politically divisive, alienating a huge portion of its potential customer base. Even Tesla owners are turning against the brand. Many early adopters of Tesla vehicles were drawn to the company's mission of sustainability and innovation, but now they feel conflicted. Owning a Tesla has started to carry political baggage, making some loyal customers rethink their support. And when a company's brand collapses, it's often the beginning of the end. This isn't just about tariffs anymore. This is about Tesla becoming a political casualty, a brand that is suffering not just from market forces, but from the consequences of Elon Musk's personal and political decisions. His gamble on aligning with Trump may have earned him influence in Washington, but it's costing Tesla dearly in the international market. So what happens next? Is Tesla actually going to collapse, or can it find a way to recover from this crisis? Tesla's possible collapse? Right now, the company stands at a crossroads, and its future could unfold in one of three possible scenarios. Some are far more optimistic than others, but one thing is clear: Tesla's golden era may be coming to an end. In the worst-case scenario, Tesla could experience a total collapse. If sales continue to plummet at the current rate, the company could lose so much revenue that it becomes unsustainable. Investors already nervous about Tesla's declining stock might abandon ship completely, causing the stock price to crash below $100. If that happens, Musk could be forced to sell off massive Tesla assets just to keep the company afloat. While this outcome is unlikely, estimated at a 20% probability, it remains a possibility if the global economic and political landscape continues to work against Tesla. A more likely scenario is that Tesla survives, but in a much weaker state. Faced with overwhelming costs and plummeting demand in Canada and Europe, the company could choose to abandon these markets entirely, shifting its focus to the US and China China instead. However, this move would come at a devastating cost. To realign itself with a smaller market share, Tesla would be forced to shut down multiple factories and lay off thousands of employees worldwide. While it would continue to exist, it would no longer be the dominant force in the EV industry that it once was. With a 50% probability, this is the scenario Wall Street is currently betting on. Of course, there's still a chance for a miraculous recovery, but it would take bold and immediate action. If Musk can negotiate new deals with Canada and Europe to lower tariffs, Tesla could regain some of its lost market access. At the same time, the company would need to aggressively cut prices to stay competitive, even if it means sacrificing profit margins in the short term. Perhaps most importantly, Musk would need to find a way to pivot Tesla's brand away from Trump, restoring its appeal to global consumers who are currently turned off by his political affiliation. While this is certainly a challenging path, it still has a 30% probability of happening if Musk can leverage his influence and make the right moves. Right now, most analysts believe Tesla will survive, but it won't be the unstoppable force it once was. The company's best hope lies in adapting quickly and making tough decisions to regain trust in its key markets. Whether Musk can pull off another legendary comeback, or if Tesla is destined for a slow decline, remains to be seen. What this means for you. If you're an investor, the current state of Tesla should be ringing alarm bells. Right now, Tesla is one of the riskiest stocks on the market, caught in the middle of a financial storm with no clear way out. The company's stock has already seen major declines, and with uncertainty surrounding tariffs, global sales, and brand reputation, the volatility is only expected to get worse. If you own Tesla shares, brace yourself. Wild swings in stock price could become the norm in the coming months. For those considering buying a Tesla vehicle, it might be wise to wait before making a decision. With sales struggling and international demand plummeting, the company could be forced to slash prices to attract buyers. This means that anyone rushing to purchase a Tesla now might end up paying more than necessary, as deeper discounts and promotions could be introduced to keep inventory moving. For longtime Tesla fans, this is a difficult moment. The company that once dominated the EV market, revolutionizing the auto industry, is now facing its greatest existential threat. Tesla's meteoric rise made it seem invincible, but this crisis has exposed serious vulnerabilities. While the company may still recover, one thing is certain: the era of Tesla's unchallenged supremacy is over. Competition is stronger than ever, and unless Musk can turn things around, Tesla may no longer be the industry leader it once was. This is the biggest crisis Tesla has ever faced, and the road ahead is uncertain. Whether it survives, shrinks, or collapses altogether will depend on the decisions made in the coming months. One thing is clear: the future of Tesla is no longer in Musk's hands alone. It's in the hands of investors, consumers, and global policymakers.